What's up, guys? It's your boy Looney back with another video. Because of all the news and all the different voices, I thought it would be a good time to just take a look at my account and just analyze what's going on and my strategy for the future and what I feel the market's going to do. And this is going to be mostly based on just what I feel. This is not really based on any kind of news or any of that. But before we get started, quick shout out to my Discord community. I have a free Discord for anyone to join. And then I also have a paid premium Discord. It's $8 a month. You get trade alerts, you get one-on-one coaching, there's a course, and more. You can check it out. Links will be in the description. But let's get into this. So my account is currently at 33K. On the day, I am down. Week, I am down 8%. On the month, I'm down 7%. On the past 3 months, 11%, up 11%. Year to date, I am down 1%. 1 year, up 42%. And then all time, up 45%. So even with all the dips going on, I am still up. I'm still up quite a few. I'm up 40% on the year, which I think is great. Yearly returns for the S&P are around that 10%, 10 to 15%. So I'm able to beat that. And what my strategy, I'm just going to tell you, I'm going to change my strategy just slightly. And what I'm going to try to do is to be less diverse. So my issue right now I have going on is I am a little too exposed to everything. I have 30 positions. That's a lot to keep track of. So I'm looking to exit it, a few. And the way I'm doing that is either getting a return I like shooting for that 100% return. Let's just do a quick look at it. What would be the closest? So cyber is a stock that I am looking to get out of. I'm up 80%. And once it hits that 100% return, I will probably sell off. I was doing daily buys, but I think I'm just going to hold. I think I'm just going to kind of let it sit there. It says it's a buy according to Robinhood. I wouldn't really take that. I would take that for a grain of salt. Here it says the fair value is 300. So it's interesting. They say to buy, but the fair value is marked a lot less than what it really is. And it beat markets last quarter. I can see it beating markets again. I don't know if it'll beat it as much as it did in quarter 3, but I'm very curious to see how it goes. And I'm just going to simply hold. And then once it hits at 100%, I will sell it off. And then Tesla, I'm just skipping down. This one I actually did have 100% return at some point. I ended up selling off a little. I didn't sell off all because this is one of these positions where I'm looking to stay in long term. I think Tesla's a really good long-term hold, and I have no plans to sell it all off. I did sell off 200 at some point when it was at 437, and that might have been the only time. And that was a really good time to sell because we're at 371. And if we just look at it, I pretty much timed the top. I actually did better than, no, I almost timed the top. I was off by a couple dollars, but that's really as much you're going to get with timing things. I try not to time things too much, but I think 100% return is really good because in my head, the chance of it going another 100% is a lot less likely than it was before. And 100% return is really good. So that's the first way I'm going to get out of positions. And then the second way is I'm going to try to acquire 100 shares of a stock and then sell covered calls to get out. Now, I do a lot of covered calls and I do a lot of call outs to my Discord, my premium Discord, and I send out trades every week. And these are some of the trades I'm running for options. Covered calls, if you don't know, they're really good for passive, consistent income. And you could do it weekly, you could do it monthly. And I usually change it up what I do, and you can play around with the deltas, the strikes, how much you're looking to do. You could also run the wheel strategy, but that's what I do. I sell options, and those stocks I'm looking to hold as well. But you can clearly see I have a lot of positions. So let's see how I'm looking to get out of this one. Data, I've been trying to get out for a while now, and I have 100 shares, so I'm running covered calls. The premiums aren't as good because the stock is not as liquid. It doesn't get as much volume. And I actually have a tracker, another little plug for the premium Discord. You're able to track your return because right now my return is negative 32%. But if we just add up all my premiums, it is probably closer to net even. And my tracker does that. It's able to understand what the actual return is. I'm not going to show it on my phone, but that is worth showing. And then the second stock I'm looking to get out of is Sony. I have 18 shares, or about 18 and a half, and my average cost is 19. But I'm going to try and get 100 shares of the stock, and I'm doing $4 a day. I might bump that up to $5 depending on how things go. For some reason, the stock has been doing a lot better than the rest. So I'm a little hesitant to go all in just right now because that everything else is kind of getting hit, but this one is running up. I'm not sure it's because it's an ADR company and this is just a non-US based company. So that could be why. I'm not entirely sure why it's running up so much. I don't really keep up news with Sony. I do like Sony. I like what they do. I know their company, but I'm going to look to get out once I get to 100 shares, either by dollar cost averaging, or if I get 100% return before 100 shares, I will sell out as well. I don't think that will happen, though. This stock doesn't grow as aggressive as other tech companies, but that is the other way. And then obviously, let's just turn to crypto and what I'm doing. You guys might know by now, I dollar cost average. So these dips aren't that bad. I mean, they do hurt. Like I would rather them go up. I'd rather all these crypto positions go up in value. But if it does go down, that just simply means I'm buying it for cheaper. And I'm just buying every day. I do $3 a day in a Doge and these other positions as well. I do a little bit less than the other ones. And I don't do like XRP or Pepe just because I don't want to be overexposed. And I do take profits. I took profits at good times as well. So what I do with those profits, I usually sell puts so I could generate even more. But with crypto, nothing's really changing. I'm just going to keep dollar cost averaging and then taking profits when I see some kind of like unusual behavior or any kind of opportunity. I sold AVE when it was up like 270%. Now it's at 120%. So I don't have a threshold that I'm trying to hit. I just kind of, when I feel comfortable is a good time to sell. When things are a little off or odd is when I sell. And I did it with Doge. I did it with a lot of different crypto. My timing is pretty good with selling. Buying might be a little different, or you could argue, I guess, you don't know you can't really time the best time to buy. That's like one of the sayings. There's time in the market beats timing the market, and that's exactly my approach. Dollar cost averaging, selling puts, selling covered calls to get that extra premium and buying power, and then looking to sell covered calls to get out of positions, hopefully get 100% return so I could sell more. And I'm going less diverse. So I'm not investing as much into SPY or QQQ, not because I'm bearish, just because I think there's better positions. And because I've been following these stocks for a while, I kind of know which ones I want to stay in and which ones I would be comfortable selling off. If you guys enjoy this kind of content, please like, subscribe, and let me know in the comments. Are you guys changing your approach? Do you think the bull run is over? Do you think it's just begun? I think we're kind of towards the end there. We're past the start, I'd say, of the bull run, but I think it's still going on. And check out my Discord. Until next time, peace.